Okay, thank you, Mark. Bismillah ar-Rahman ar-Rahim. I have the pleasure to invite the panelists for the next session. Originally, we have 4 speakers, but one of the speakers has an important trip to the Asia to conclude a good deal for his company, Mr. Fadi Khatib. He will be able to join us this afternoon, but we have with us 3 distinguished speakers. If I may invite Datin Maznah Mahbob from AmInvestment Management Services, and Mr. Tariq from S&P and Dow Jones Indices, and Brother Mohsin Sheikh bin Sehu Mohamed from Al-Madina Investment here in Muscat. Please take your seat. Thank you everyone for being with us in this session. This is the second last session before the lunch, so hopefully they are good starter for the lunch. We have to manage our time, inshallah, more efficiently. We have about 40-45 minutes or less to manage the issue of Islamic asset management companies, asset management investment in new market. And we have 3 distinguished speakers. As we have seen in the previous session, we can invite the speakers to introduce to the audience about themselves, the company, and perhaps what they are looking to create more value in Islamic asset management space in new market. If I may start off with Datin Maznah to tell about yourself and your company and your value proposition in this space. Thank you very much.
Hello. Okay. Assalamualaikum warahmatullahi wabarakatuh. I'm representing AmInvest, which is the funds management business of the AmBank Group. The AmBank Group being a listed bank in the Kuala Lumpur Stock Exchange. In terms of the fund management, we have been managing funds for more than 30 years, and we manage about over 10 billion USD assets under management. Of this, about 15%, about 1.5 billion USD are Islamic assets. And in terms of Islamic fund management, we've been managing Islamic assets for 25 years. And also, in terms of our Islamic assets, the breakdown, we specialize in liquid assets. 50% of this is equities, and 50% are sukuks. We manage not just Malaysian ringgit assets. We manage active Asian equities, active global sukuks, and we also manage global listed equities in the Sharia space with a quantitative approach. In terms of our client base, most of our clients are institutional in nature, ranging from sovereign funds, pension funds, insurance companies, corporations. And we have retail investors as well, which we distribute through third-party distributors, which is banks, other banks, independent financial advisors, and the like. We have the most number of third-party distributors for our retail funds in Malaysia. We also have foreign clients from Brunei, Indonesia, the Middle East, and Switzerland. And we feel that in terms of assets, we are the largest fixed income fund manager in Malaysia. Actually, our base was, of course, in conventional assets, of which we grew our Islamic asset management capabilities out of that. And because we are the largest fixed income fund manager in Malaysia, and also we usually win most of the awards for our active fixed income management, that has, we have managed to leverage on this capability, especially in terms of credit, assessment, because credit assessment is the core of the management of an active sukuk mandate. In sukuk management, just like bonds, of course it is lower volatility than equities. However, the risk is not so much the volatility, but in credit. I think in Malaysia, at least, in our management of Asian bonds and global sukuks, we are the only fund management house which has never had a credit default. So how we add value is very active management in the sukuk space, but it's very important to have a strong credit process, because you can be very good in terms of the value add, but suddenly if you have a default, that can wipe out a lot of your profits and capital even. So that is that core competency which began in the conventional fixed income space, which we are now employing in the sukuk space. In terms of the equities as well, we are very conscious of the volatility of the equities, which is posed a challenge to investors and in today's market environment, resulting in the quest for yields. You know, everywhere what people want are income, yields, stability. As such, I think some of the discussion this morning has been about that. It's been about property assets, yields. It's been about leasing assets. It's been about yield assets in particular. And it's no different in the equity space, because, you know, the volatility has been very challenging. So as such, we have put a lot of research and development and derived certain strategies in the traditional public equities asset class, which has been able to deliver much lower volatility and yet regular income, so much so skewing the risk-return characteristics of, you know, away from what is normal equities, and it looks almost closer to a bond or sukuk asset class without the credit risk, because, you know, whatever happens in equities, you can't default. At most, you know, you may have a bit of volatility. So that has been very interesting, and we have applied these strategies across equities all over the world, the developed equities, the emerging markets as well, over 20 countries, and it is very interesting.
Okay.
So
thank you, Datin.
Yeah, thank you very much.
Thank you, Datin, for that comprehensive comment on your value proposition on the credit scoring for the fixed income instrument like sukuk fund, and the research on the equity space to reduce the volatility and to make sure that the equity behave as close as possible to fixed income instrument that your investment house is looking into to give some value proposition to your investor. I have to stop you because we wanted to give more time for the floor later on. Let me now move to an old friend of mine. He's still young, of course. I'm still young either. So Tariq Al-Rifai. Director of Islamic Indices, Standard & Poor and Dow Jones, because there has been a merger between the two index companies recently. So basically, he will tell you more that Dow Jones and Standard & Poor have been providing some Islamic indices for equity asset. In fact, Dow Jones has also the Sukuk index. So perhaps Tariq would take about 5 minutes or so to describe himself and what the value added would he be able to to offer to our Islamic finance community. Tariq, please.
Bismillah ar-Rahman ar-Rahim. Wassalatu wassalamu ala ashraf al-mursaleen. Assalamu alaikum wa rahmatullahi wa barakatuh. Yes, as you mentioned, we were the first to launch a group or a family of Islamic indices back in 1999. And at the time, the equity investment was just beginning to launch in the Islamic finance industry. So I feel proud that we're a part of the initial launch and the initial growth of the Islamic space, particularly on the equity side for investments. We have since grown beyond equities, and in 2006, we launched a Sukuk index, which is a global US dollar denominated investment grade Sukuk index. And obviously, we're always open to expanding this index beyond US dollar, beyond being global. I mean, we can even do local, we can even do multi-currency. But going back to the equity indices, we originally launched a global family. The primary interest at the time was developed markets. It has since shifted to the Middle East, the GCC, and emerging markets. So we have a full range or full family of indices that cover the region. One of our, clearly our largest market in the GCC is Saudi Arabia. And the indices that we offer them, because it's a well-established fund industry in the region, or the most established fund industry, and it has the largest amount of funds. We do a lot of customization for them. Our business is very demand-driven, so just because we don't have it doesn't mean that we can't do it. A lot of what we do is based on what a client wants us to do. So they approach us, they say, we want a benchmark based on this criteria, and we'll do it for them. So I think Saudi Arabia is a good example because we do a lot of customization there because they have a lot of sophisticated portfolios, a lot of different investment themes they try to follow. A recent investment theme that we've been working on, and I think there's a lot of potential for Islamic finance, is we've heard over the days that there is a shortage of fixed income instruments in Islamic finance. This is true. This is one reason why we'd like to see more development on the Sukuk side, or any asset-backed security side, because I think there's huge demand there. But in the meantime, if you're an Islamic investor, what do you do? The Sukuk market, we heard, you can't really trade in and out of it. The trading is very limited. The sizes, as I think the previous speaker mentioned, are big sizes, so it's not ideal for the average investor. So what do you do? We had an investor approach us, and they want to receive an income at the same time receive some type of potential capital gain. So what we did is we developed a high dividend yielding index for them, which is investing in a global portfolio of companies that pay above average dividends. So this gives them the dividends that they want, as well as it gives them the potential equity upside that they want. So these are just a few examples of the capabilities that we can do. But as I mentioned, and I'll close with this, is that we have very few limitations on what we are. We're not very, or we're very flexible in what we can do. So in terms of what we can do for the Omani market or what the opportunities are, it's basically whatever you tell us you'd like to see.
Tariq, thank you very much for that, insight. But before we move to Brother Mohsin, perhaps you can explain to the crowd what do you mean by Islamic index or indices, because the screening process, the methodology, and how it was constructed since 1997, 1996 until today, the methodology involved in creating this index.
Okay. In creating a benchmark, or what makes up something that is acceptable to invest in and versus what's not acceptable to invest in, there are two main criteria you must follow. And obviously we developed this over the years with our esteemed Sharia board. And the guidelines that we established in 1999 have pretty much become industry standard today, with other organizations having slight modifications to it. But the criteria is all the same. First of all, based on, I think, the Fiqh Academy in 1995 or 96, they approved guidelines to invest in global equities. This really opened the gateway for us as well as you to invest in global equity markets. These guidelines were provided several things. First of all, it outlined a brief of how you must invest in equities. What we did is, when we were developing our indexes, we need to come up with a valid methodology that we can stick to that will also comply with these guidelines, and that's what our Sharia board advised us and we structured. The two criteria are, first of all, you take your starting universe or your global list of stocks, or any list of stocks that you want to use as the starting basis. Then you apply the industry screen, which is fairly simple. You remove the industries that are not compliant with Sharia. The obvious ones are entertainment, gaming, gambling, things like that, conventional financial services. Those companies are all removed. Then you apply financial screens, and the financial screens are applied to remove companies that are highly leveraged or that received high interest income. An example of this will be companies that have high cash balances. Of course, they need to invest these cash balances in or interest-bearing securities. So companies that have a certain portion, and it depends on what you consider high portion, as well as a high portion of debt, which is the common methodology of high debt, means any 1/3 debt to equity ratio. Anything above that is considered too high and it's removed. So as I mentioned, first you apply an industry screen, so you remove companies that are not in a compliant industry. Then you remove companies that fail the financial screen or the financial ratio screen. After that, you're not done yet, because obviously up to this point has been a fairly automated process. Then you need to apply a manual process, because there are a lot of companies that fall through the cracks, that don't make it in the list, and vice versa. So you need to provide manual review of the companies to make sure that the list that you come up with fully meets the criteria that you establish. The resulting list, or the list that you have in the end, those are the stocks that you can invest in that are approved according to the Sharia guidelines, and those are the ones that you can invest in, and those are the ones that we can use to create an index.
Yeah, thank you very much, Tariq, for sharing the methodology of screening the stock, global equity stock, to create Islamic indices at a global level, at the regional level, at certain sectors level. They have families of indices that can be used by the fund manager to really pick up from the stock and invest in the stock if that stock comply with your commercial and business decision at the end of the day. So this is what Dow Jones and Standard & Poor's and some other indices are doing to provide ready-made, customized stock which are compliant for fund managers and banks to subscribe to, rather than doing their own screening in one way or another. Let me now move to the third speaker to represent the Al-Madina investment here in Muscat, Brother Mohsin, Head of Asset Management, to talk about yourself, the company, and what is your proposed value proposition to your investors here in the Sultanate of Oman. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thanks, Doctor, for this opportunity, and to the Amanie family for organizing this event. Obviously, I've been here quite new in Oman for the past 6 months, and I would say it has been an enjoyable experience when coming up with new structures, and especially on the Islamic finance avenue. Just to give a brief background about Al-Madina Investments, obviously to the people who came from out of Oman, Al-Madina Investment has been established since 1998. Their focus is more, during its inception, was on the brokerage side. However, moving forward, in the year 2000 onwards, the management and the company have this spirit of going into the real economic activities, which is in line with the Sharia maxim, which is called Al-Gurum Bil-Gunum, whereby you take risk and you get reward. So basically, they saw that a lot of investment opportunities in Oman, and also how you develop Oman in specific. What I mean is that they will get in terms of more on private equity investment activities, which is not on fund structure but direct investment. Meaning, see, for example, if you see in Oman, there are plenty of companies that was promoted by Al-Madina Investment. I will give an example, Al-Madina Real Estate. When we see that during that period of time, there's a lack of development in the market when it comes to property investments, so the management saw this opportunity and they created Al-Madina Real Estate to meet this kind of demands. So it's more on an economic kind of view as supply and demand. When we see there's a demand, we will provide the supply. Throughout the journey of Al-Madina Investment, we also created this Al-Madina Insurance, whereby we promoted and we saw there's a lack of an opportunity in terms of insurance company. And Alhamdulillah, we are probably going the first to be a takaful company. And throughout the journey, we also looked that there's a logistic proposition for the companies, for the Oman as a whole, where most of the logistic companies here was controlled by the family offices, and we created Al-Madina Logistic. Throughout, we also saw that there are opportunities when it comes to education, for example. Recently, we created a Canadian school, it's a JV, with us, and we created this particular education to meet the education need of the Oman society today. And also, we saw that there's a need in terms of food and beverages, for example. We created a company called Gulf Brands to meet up with this kind of activities where it's more on the retail kind of sectors, where you give opportunities to companies and so franchises to step foot in Oman market. Throughout that particular period and recently in year 2012, when the company now looking, like I mentioned, the spirit has been Islamic finance. The spirit of the company has been Islamic finance. So now with the emerging of the Islamic finance in Oman in particular, so we have come up with this so-called Islamic finance boutique within the firm. So what does this Islamic finance boutique does that now whatever activities that we are going to carry forward will be Sharia compliant. What I'm saying is that not that our past activities wasn't Sharia compliant, but in a proper way whereby you have like a Sharia advisors and the structures will be issued by fatwas and whatnot. So that's what we've been doing. And recently, I will like to share some of the, our experience, and also one of the, probably I would say, is a turnaround in the Oman Islamic finance market is that we just want a mandate, and so we have entered into a mandate to structure the first sukuk in Oman, which is the Tilal Sukuk. This is something that we are working with the Tilal Development Company, and the issuance size is around 50 million Omani Rial. Obviously, the size is not as huge compared to the other sukuks in the market, but then this is the stepping stone in the Oman Islamic financial market to have something viable and to make the Islamic financial market start to move. So we are taking that particular role, especially in the capital market environment, to push forward whatever activities that we see that can help and also boost Oman to become one of the Islamic finance players in the world. So those kind of activities that we are taking at this point of time.
Thank you, Brother Mohsin, for that comprehensive report on the Madina investment, what they have been doing and what are they going to do in the future. And we have heard just now from Mohsin that they are working on the first Omani sukuk here in Oman using the property as the underlying asset, which is something which is very tangible, very perhaps straightforward to give more confidence to the investors. Let me come back to each and every panel for the second round, and after that I promise to open the floor to the Q&A. If I can ask each and every one of you, we have about 1.5 minutes to answer. Okay, each. Okay. Perhaps Tariq, you mentioned about equities index and the sukuk index. And in Islamic world, we have seen some other asset classes like properties and commodities. And no one has, let's say properties, REIT property. We have not seen any screening to screen the shopping complex, vis-a-vis warehouse, vis-a-vis logistic and beyond, so on and so forth. So perhaps you may comment on properties and commodities index, and how soon could we see any light of having this kind of index? Thank you.
Okay. First of all, I'll begin with the commodity side because that's the most challenging. If you look at how, we'd love to develop commodity index, but if you look at how commodities are traded, and maybe you can shed some light on this one, they're traded on futures and forwards market. So when you can't buy oil on spot market, you buy oil on future market for delivery 3, 6, 8 months down the road. And it goes the same with almost all other commodities. Only a few commodities trade on spot, and as you know, trading on the spot market, that's Sharia compliant. So for us to come up with an index that covers commodities, we cannot adequately do it right now until there's a pricing that meets the Sharia guidelines. On the real estate side, we have just developed a global Islamic REIT index. And this is, we did a screening of all the REITs that are on the market. Obviously, REITs are real estate investment trusts, which is set up like a fund, and it holds real estate assets, whether it's commercial buildings, whether it's industrial warehouses or apartment buildings. It could hold anything, but a real estate investment trust is just a structure to house real estate assets. And real estate investment trusts are, in many cases, publicly traded like a stock. So, of course, since we are index providers, we look for anything that we can get a good price on. And obviously, since they're publicly traded, we can get pricing on it. And since we can get pricing on it, we can do screening and to dig deeper into the assets. If they meet the Sharia guidelines for our screening, as I described earlier, then they qualify to be included in an index. And we've just developed an index on Sharia compliant REITs, as well as now I'm happy to say that in Malaysia and in Singapore they're actually Islamic REITs. So they're Islamic from their foundation. So all their leverage, all the tenants, things like that are in the REIT are all Sharia compliant. So on this side, this is a very exciting development, and I think that there is a lot of demand for Sharia compliant REITs.
Thank you, Tariq, for that. Moving to Datin Maznah, I think I have seen the behavior of your company for the last 5 to 10 years, and you are known in Malaysia as one of the active fund manager to do the feeding fund, where you collect your investment in Malaysia and you feed the amount of investment to some other fund manager to manage for you overseas. Do you think that Oman can also do the same thing between yourself and your asset management in Malaysia, so that the Omani fund can feed to you, or the other way around, so that there could be some cooperation between yourself and the Omani local market based on the theme of Tun Mahathir's speech yesterday? How could we really talk about cooperation between the two countries and beyond?
Okay. Our business model is about helping the clients to manage their investments in a changing world. So utmost in our mind is to be a comprehensive investment solutions provider to meet the needs of our investors. So as such, especially I think about 7 years ago, our core competencies were, at that time, domestic assets in terms of equities, bonds, and sukuks. And around that time as well, Malaysia began to liberalize, allowing our local investors to invest in non-Malaysian assets. So what we did to ensure our clients have the largest number of choice in order to build their total portfolio in terms of to build a diversified portfolio, we immediately offered a comprehensive menu to our investor clients and distributors of asset classes which we didn't manage in-house, but our value add was to identify the best of breed provider in that particular asset class. I'll give you an example. For example, that most of the investors at that time were invested in Malaysian equities and Malaysian bonds. So immediately we gave them choice in asset classes which had the lowest correlation with their traditional asset classes in order to give them the greatest diversification. So at that time, we gave them developed markets because it's very different from Malaysian and Asian in terms of equities, in terms of fixed income, in terms of property, in terms of commodities, in terms of precious metals. So we had the most comprehensive menu and choices very quickly, and as such, we signed up the most number of distributors. So in 1 year, from zero in terms of revenue, it went up quite quickly to 2 million USD in just 1 year, and after that, of course, it went on. As years passed, one was our value add of choosing the external investment provider, and two was the expertise we built up in monitoring their continued performance on behalf of our investors alongside, side by side with our own in-house managed funds. So along the way, the statistics around the world, I think most of the investors in the world would know that many of the, in fact most, maybe even all, of the best of breed active fund managers in the world could not outperform the index, could not outperform the index on a consistent basis. So we saw that, oh, you know, even if we chose the best in the world, they could not. Because they could not perform, as you can see in the whole world, there was a huge demand, and trillions began to be invested in index funds through ETFs, of which there are some Islamic ETFs. Because by buying such index funds, I mean, they are actually even better than the active fund managers. So we saw that. So because we were from zero base, we began to do a lot of our own internal R&D, because if we want to go global, we cannot afford to just beat the benchmark. We must beat the best in the world. And as we saw, our partners who were the best in the world that we chose could not even beat the benchmark. So a lot of our R&D was to derive global strategies in global asset classes, which would, of course, beat the best in the world as a benchmark and beat the indices. So because we were so focused on that, I think the results have been very encouraging. So I think that now we have specialized Sharia strategies, which actually have become very competitive in the global asset management space. So for Oman, maybe if the Omani financial institutions are just starting out, just like we in Malaysia in 2006 was the initial liberalization, it may not be a bad idea to immediately give your potential clients a complete menu by working with partnerships whereby it gives you a very quick speed to market, instant, and without much investments in the in building up these instruments, and yet you have the immediate revenue in, just like I think I saw the presentation by FW this morning on the Takaful bank assurance space. You can do that, plug and play. For the fund management space, you can have all the products in the world, Sharia compliant, plug and play, instant, so you have instant revenue, while you focus your resources on, instead of recreating the wheel, just take it as it is, make the revenue immediately, focus on your resources on improvements, innovations, improvisations applied to your local market to bring it to the next level.
Okay.
Because, it's just like we did not bother to reinvent what conventional fund managers and other people have already done before, but we took them on board immediately and focused all our resources to being even more competitive. So if we all work together, perhaps, the Omani wealth management, asset management and financial industry can short-circuit and just zoom to the next level ahead of everyone even.
Yeah, thank you, Datin, for that, strategic point of view of how established asset managers can work with perhaps a new market asset managers to invest in other market of the world, from Oman investor investing in either global or the Far East or the Asian investment asset. Quickly on Brother Mohsin, we have seen in GCC in particular, they have three categories of asset, four categories of asset, basically equity, properties, and sukuk. In between, they have what they call the capital protected fund or structured products to give the investor, the minimum protection, capital protection, and some upside if the market were to perform according to their forecast. We have not seen that in our discussion in the last 2 days of any attempt in Oman to create another asset class, which is very much easy to sell. In fact, in Bahrain, in Kuwait, in UAE, these products are so popular because it can give some good return, at least some capital protection. Perhaps, in order to tap your brain, how do you see that we can do something between equities, properties, and sukuk, something else in between? Perhaps Madinah can champion and try to be the leader in this area. Thank you.
Well, you give me a technical question here. Well, again, just to give some background on the Oman market when it comes to asset management itself, I would say we are relatively very, very new in terms of the asset management. Again, like what I mentioned, the flavor of GCC in terms of investment has always been private equity and also real estate. And also when you say about real estate, that has been the bread and butter of GCC investments throughout these years. When it comes to in terms of asset classes, if you are talking about sukuk, you are talking about real estate, you are talking about mix and also the structured, and also equities. In Oman itself, in terms of the equity market, it's not as vibrant as the other markets in GCC if you're comparing to Qatar or UAE. This somehow provides some restriction if you want to come up with some sophisticated, sorry to use this word, but it's not that Sharia compliant, but sexy kind of investment. So in terms of that, you can see that it's kind of limited. However, step by step need to be taken in this particular market. Probably you need to start with something that will give these investors, obviously when you say investors in the Islamic capital horizon or typically in the investment world, there are three types of investors. Investors who are willing to take low risk, moderate risk, and high risk. And from these three types of investors, you can divide it into another two set of investors, which is purely Sharia compliant investors, and also the other investors is that they just the rate sensitive investors. Doesn't matter Sharia or conventional, whatever, they are more sensitive into rates. So if you are combine and do some mathematical hypothetical in terms of the investors, you will see that investors for Sharia is much more higher because Sharia investors are there and so the conventional investors are there. So obviously in terms of investors, number of investors, they are huge. I just want to share in terms of my personal experience when in Oman, when I was, I need to go to a bank and I need to open up a savings account for my salary. And the first, after I fill up the forms and everything, the salesperson, I mean the banker asked me, do you want a interest account or non-interest? Meaning say you have a conventional, that's the market, but I can now, if you don't want an interest, okay, I won't give you any interest. Meaning say there are huge amount of liquidity in the market this gives the avenue in terms of they are looking for a product which is Sharia compliant. So, in terms of liquidity, Oman has it. In terms of product, that's where we have to work on. In terms of creating a product that will give this kind of meat to the clients, well, you need to really put some kind of proposal and also work with the capital market authority to come up with the landscape, the infrastructure itself, for you to meet up with this kind of achievements. So meaning say, obviously you can be step by step, you can come up with a product that the market understands, and at the same time, we give a good return and also capital protection to the market.
Thank you, Brother Mohsin. I don't want to be personal to you, but may I know which bank you transfer your salary to? You need to answer. Okay. We have about 5 minutes. We are managing the time quite well now because we are coming back to the schedule of the time. Perhaps I can open the floor for 5 minutes interaction. Can I see the first hand? Any other hand? Any other second hand? Perhaps the last hand? Yeah, okay. 1, 2, and 3 gentlemen. Microphone, please, so we can take question all together and we can ask the panel to comment. Your name in brief and your institution, and be brief and sweet.
Ishaq Al-Ma'wali from Public Authority for Social Insurance, Head of International Investments. My question is to Tariq. Basically, a few weeks ago, I was trying to compare the indices, and basically what I have done, have taken the MSCI equity conventional indices, comparing them to the Islamic indices. And clearly, and the purpose of that is trying to see, I keep hearing that the Islamic finance outperformed during the financial crisis in terms of the equities. And the calculation I have done is clearly shown that the Islamic indices outperform the MSCI equities, which is the conventional equities. However, I'm hesitant to say that that is not, from my point of view, that is not a right and proper way to do it. And the reason behind it is the composition of both indices. They are different. So I was looking forward for this forum to really address this, and this is the opportunity that there is somebody like you in here to be able to answer this question. If this is not the right way and the right methodology to do so and compare the both indices, then how this stereotyping or the conclusion being derived and said that the Islamic finance outperform the conventional finance? This is the first question. The second question is that if Oman is trying to create its own indices, yesterday we had one of the panelists, he was saying that Oman has to do the screening and we need a third party to confirm it. You have mentioned in your discussion that we will sit with the officials in these stock exchanges and hear from them the way they want it. Is this contradicting with what you have said at the beginning, where you said there is, as long as it is in line with the principle and the guidelines of Islamic finance, then this will be classified as Islamic security? So my question to you, is it necessarily that each country like Oman has to go to S&P or FTSE, whatever, and ask them for the verification? And what is the benefit of that you sit with the officials and listen to them? I think you have a set of guidelines and principles, and do you go by country wise, or you have really a set of indices that or guidelines that you follow, and so to be standardized all over the indices?
Thank you, brother.
Thank you.
Thank you, brother Ishaq. The second hand just now, yeah. Please pass the mic.
Should I go ahead? My question is related to Sukuk market, and as we're seeing it prospering in the GCC market, I'm wondering, and my impression is that we lack good and transparent bankruptcy laws. How do you address that risk to your investors? And yeah, that's basically.
Thank you very much. A very, very good question, Brother Khalid.
My question is to Maznah. And if possible, you can share with us your experience in setting up the REITs for the KPJ. I think your bank was the financial advisor for this deal. And if we are to adopt that in Oman, for example, for the public sector healthcare, is it a possibility that can be adopted here in Oman? Is the question clear? Thanks.
Okay. Thank you very much. I have to stop the Q&A now and ask the panelists to comment 1 minute each.
Oh boy, okay. That was a 2-minute question with a 1-minute answer.
Yeah.
All
For
right.
you, 2 minutes, okay.
I mean, I've been tracking this for years now, the comparison between a conventional index and the Islamic. And the 2 most recent ones I did were, I was comparing the Dow Jones Global with the Dow Jones Islamic Global, as well as the S&P 500, which is a US-only index, versus the S&P 500 Islamic. And the results are what you said. Over the long term, the Islamic index outperforms all the time any index. That's been clear. And my research went back to 1996. So during the dot-com bubble in the US and Europe during 2000, the Islamic index greatly outperformed. And during the financial crisis, it outperformed. However, if you look deeper into why the Islamic index outperformed, there are 2 main reasons for this. Reason number 1 is that there are certain sectors that are not included in the Islamic index. Conventional financial institutions, insurance companies, a lot of the hotels, gaming, entertainment, and most media companies. So during the dot-com boom, of course, you see the Islamic index rising rapidly. Why? Because to make up for this, that they're not invested in financials, insurance, and other sectors, the Islamic index tends to be overweight or more heavily invested in technology, healthcare, and oil and gas. So during 2000, of course, it went up faster because it's overweight in these sectors. During the financial crisis, it went down. Of course, it went down, but it went down less because of the lack of financials in it. However, if we go back to beginning of this year financial services have done well. So this year, in the U.S. in particular, the conventional index has outperformed because of the financial doing well. But this is only less than 1 year. So you're correct in saying that over the long term, Islamic outperforms. On the index calculation side, yeah, I mean, we calculate indices for all markets. Our GCC index has included Oman in it ever since we launched the GCC index. But in markets, for example, such as Saudi Arabia, where their Sharia criteria might be slightly different, obviously we have a universal criteria. Our criteria is standard. We cannot change it because it's a universal criteria. We need to be the same across all markets. So the criteria we establish, if you use our index, it has to be the same. However, we get approached a lot of times by customization, and primarily Saudi Arabia, because they have slightly different Sharia guidelines. So they give us the criteria, we calculate it. And we calculate it, as you said, for validation or because they want an independent third party. In Saudi Arabia, I know it's a law, it's a requirement that if you cannot calculate your own index, conflict of interest. So they need to hire a third party to calculate it, and we do this for them. And I think that's fairly normal.
Thank you. Datin, Maznah?
I think there was 2 questions just now. Before I answer those, may I just add something to this Islam Sharia index from our perspective? Whereas I have some skeptical investors as well who ask me this question when I promote my Sharia equities funds. They are skeptical because although the Islamic investments outperform, as we have discussed, but they think it is circumstantial and they think it is cyclical when financials go down, then the Sharia equities outperform, and when it bounces up, then they will underperform, and that relationship will continue. Because frankly, this relationship has been going on for the last more than 10 years, 15 years. But what I tell them is that they have to ask themselves, going forward, will this relationship continue? Because the whole financial industry has changed with all the new regulations and all the deleveraging, the Basel III, the Solvency II. So the whole financial industry worldwide has changed. So without this leveraging, and this deleveraging will continue for at least a decade or two, will financial stocks and will the financial sector behave as it did before, driving the global growth engine and being the outperformer of the stock indices? Now, if the question is no, as most bankers seem to be struggling with all their downsizing and all that sort of thing all over the world, if that answer is no, and in fact the financial industry in general will be a drag to the equities indices, therefore the only way to escape this drag will be to invest in stocks indices which do not have this drag. So the only in stock indices which do not have this drag are Sharia indices, because ethical indices is sort of the same with Sharia indices, because they don't have gaming, they don't have alcohol, but they have finance.
Okay.
So if a normal investor,
Datin,
whether they're Muslim or not, want to escape, they have no choice.
Can you go to the second question?
Okay.
Yeah.
The second one is about the bankruptcy act.
No, I think you can skip that to Mohsin. Perhaps you can focus on KPG rates.
Oh, okay. Yeah, the KPJ REITs, I think, it is the Islamic REIT in, that we invest in as well. And I'm sure if healthcare REITs are very much in demand from sukuk managers, and it is definitely something that you should actually issue. And I think Amanie, it would be very much in that position to help you structure. And we are always, as from sukuk investors, always looking to invest in good sukuk assets.
Okay. Just a footnote to KPJ. Basically, as you know, with Khalid, they pulled together a chain of hospital under the same group of KPJ group, and they basically sell to the trustee, let's say 500 million ringgit Malaysia, and the proceeds will go back to the group for them to build more hospital and medical services, and they lease back the hospital from the investor, trustee, and the investor will be getting the lease rental, as you know. In a nutshell, this has been done, but along the way they have some problem of cash flow, and we come in as Amanie to provide the sukuk for them to have more capital to manage their operation. So a combination of equity and fixed income, if you like. Mohsin, on the bankruptcy law, which is not common in Oman, perhaps even GCC throughout. So we have to address this issue for sukuk, if you could.
Okay, bankruptcy law. I just give you some idea in terms of the sukuk itself. When you are issuing a sukuk, you are no different when issuing a bond, whereby the risk is related to the issuer. However, in sukuk, you have these structures of mostly SPV issuing the sukuk, but the obligor is the credit risk is based on the obligor. So it's how basically the obligor then will influence the sukuk rating, for example. So obviously the sukuk rating then will classify in which case how risky are you. So for example, if you are talking about BB or B rating, then obviously the chances of you go default, there are chances. So meaning say, if in terms of the bankruptcy law itself, it shouldn't be different when it comes to the normal current issuance for bond or normal lending activities in the market. It needs to be same. However, it always go back to the credit risk assessment and also who are the obligors' appetite on paying these particular coupons. So it's basically how risky are you and how credible are you in getting this financing, and how are you able to pay throughout the maturity. So again, it goes back to the issuer, which is the obligor in most of the case.
Thank you. Ladies and gentlemen, let us show our support and appreciation to the panelists by giving a big hand to all of them. Thank you very much. Thank you.